All right, your next guest suggests the Inflation Reduction Act will probably have a fairly negligible impact on the macroeconomy. Market forecaster Jim Bianco runs Bianco Research and joins us now. Let's look at something from the Tax Foundation. As far as I know, they're fairly nonpartisan. They actually said it might cost about 30,000 jobs and sort of contract a little bit. A lot of the inflationary, anti-inflationary things that are in there, like Medicare pricing, Jim, don't kick in until, what, 2025, 26. This goes to the bond market, what you follow, goes to the Federal Reserve. How do you read it?
Yeah, I read it as kind of a modest type of bill as well, too. It's a long-term bill. It's a 10-year bill. As you pointed out, a lot of this stuff doesn't kick in for another couple of more years. And in a world where we want to know what the Fed's going to do in September and when inflation is going to peak, and those are 22, 23 stories. Those are going to continue to dominate the markets. And maybe once we get past that in a year or two, if this bill survives a projected change to a Republican Congress, or at least one of the chambers to a Republican Congress, then we could start focusing on it. The other thing I'll point out about the bill, 87,000 new IRS auditors. It's going to be the biggest government agency in Washington, and that could maybe have an effect, too, on markets as we move forward.
Yeah, the market seemed fairly sanguine about it today. And listen, obviously, we talk a lot about the Federal Reserve, and this is a political story, but it's called the Inflation Reduction Act. It was called Build Back Better. Obviously, that didn't work, so they tweaked it and changed some things in it. Is there anything that you see that will actually reduce inflation anytime in the next couple of years? I don't, and even some of the government scoring agencies don't.
No, I don't see anything that will reduce the inflation rate. There are some things that might reduce prescription drug prices and maybe a couple of other things here or there. That'll be good for those people that rely on it. But will that bring down CPI? Will that bring down core CPI to a point where we could actually start to price that in? No, I don't think so.
Yeah, and it matters. I mean, here's the question, Jim. How do you read inflation? I'm looking at that. Like, can we bring that graphic back up? You mentioned used car prices. Funny because I'm basically in the market for a car, Jim. My car's dying, but I'm driving the heck out of it because I look at used car prices still, and I'm like, I'm sorry, I'm not paying X for that car, and it's just insane. So I'm throwing a bunch of money in my old car. Do you see inflation now actually coming down? Because, I don't know, airfares might fall a little bit.
Well, first of all, Brian, if you're not going to pay X for that car, then you're going to have to walk, because that's the only way you're going to get a ride right now. Used car prices in the last 18 months have actually outperformed cryptocurrencies. It's been one of the best investments that people
really?
can have, the way that those prices. Yeah, oh yeah, the used car prices have been just soaring. They outperformed crypto in 2021 when it was up, and obviously they're outperforming it this year because crypto's down a lot. But they've been very, very good. Now, as far as inflation goes, no, I've been in the camp that inflation is persistent. It's going to stay persistent. Is it going to stay 9.1%? Well, probably not. But it might settle down into a 4, 5, or 6% range. And what does that mean? We're going to need a 5 or 6% funds rate if that's where inflation is going to settle. Wow. And why is it going to settle at that range? Because wage inflation, from what we saw in the report on Friday, is at 5.2%, and it's looking pretty sticky there. If we have 5% wages, you can pay 5% inflation. So it's not going to go much below wages.
Yeah.
We need to get wages down to 2% in order to get inflation down to 2%, and wages aren't moving right now. They're staying pretty solid, and employers are paying up to get people because they've got 10.7 million open jobs in a world of 4.9 million unemployed workers.
Yep. Jim Bianco, well said. Let's go. Guy, we'll go quickly to you, and then Steve Grasser. Listen, inflation is everything because it affects the Fed. The Fed pushes the market around like a boss snowplow. All right, how do you see inflation right now? If it comes down to 7%, that's still really high.
It's ridiculous is what it is. I mean, and that's probably what we're going to have, a 7 handle. But listen, I'm with Jim, and I've been with him for a while in terms of his views. You might go from 9 to 7, 7 to 6, but that's a long way away from 2, and it ain't getting there anytime soon. And I think a lot of this rally has been predicated on this misguided belief that somehow this Fed is going to pivot. They're not, because inflation is going to remain hot, and they're going to continue to combat it. So if you're buying stocks on the fact that the Fed is going to reverse here, you should be selling them because they're not.
You know, I think really quickly, I think it's a supply chain issue too. We have to factor that in. So used car prices have never been the same price as new car prices. So I think that's your tell. Every other commodity has come in. I think the CPI is going to miss to the downside drastically.
Okay.